if you guys understand what I will be sharing in this entire video, I can guarantee that you will be saving a lot of time and a lot of money. This is probably the most important video for you guys from our YouTube channel, because this is what I personally use. This is the optimization of SMC I personally use when I'm trading SMC. And this is the completely transparent method I use to trade smart money concepts. So you will be getting a lot of value from this video. So even if you're not trading smart money concepts, still this video will be very useful for you guys, right? So I won't be editing this video. This video can be a bit long, but I would recommend you guys to watch this video till the end. Okay. So what is this video about? So as you can see, I have mentioned complete SMC optimization. So guys, smart money concepts is actually just a concept. It's not a trading strategy in itself. Like price action, like trading using fundamentals, macroeconomics, SMC is also just a concept. We should develop a strategy using smart money concepts, and then we trade the markets, right? So this entire thing that you guys can see here, all these data points, this is not for any one particular strategy. This optimization is for full of SMC, right? So you can use this and you can do a lot of things. You can create your own strategy. But the important thing is I have accumulated this data to get the best results, right? The safest results, which means that you will be having the least amount of drawdown if you use these data points. At the same time, you will be getting the maximum RR, right? So this is the safest and the most efficient way to trade the markets using smart money concepts, right? So that's what this video is about, guys. Okay. So after years of trading smart money concepts and after backtesting a lot of data, tons of data, this is the final result that I have come to for trading smart money concepts, right? And I'll be sharing everything. I'm not hiding anything from this. I'm sharing my complete method on how I trade using smart money concepts, right? Because I really believe that a lot of you guys will be benefited from this video. All right. Okay, so that's the intro. Now, let's get into the topic. So as you can see, I have categorized these optimization into 4 different categories, right? So the first category is for trend. The second is for phase. Don't be scared if you don't understand this. I will be explaining everything. I will be taking my time. The third is for strategy selection. The same thing. Don't be scared. I will explain this. And the final is for order block selection. So guys, first let's recall what is the pillars of smart money concepts. The first pillar of smart money concept is market structure. Without market structure, you can't trade smart money concepts, right? So the first category right here is completely for market structure. And not just the first category, the second category as well. These 2 categories are fully for market structure, right? Optimization of market structure. The third one, which is strategy selection, is a set of confluences that you should look for within the market structure, right? So this is the third category for smart money concepts. The final one is order block selection. It's actually pretty simple when compared to these things. So let's get through all these things thoroughly one at a time. Okay, guys. So the first thing is trend selection. So if you guys see, I have marked this one as the first data point right here is pro. The second data point right here is pro counter, right? So actually I have ranked these things, right? The order I have written these data types are not random, right? I have ranked this. So which means this is rank 1, rank 2, rank 1, rank 2, rank 3. So the rank comes from top to bottom, right? So this is the best, this is the second best, this is the third best, right? So this is the same for all the other categories as well, okay? All right. Hope you guys are keeping up with what I'm saying. Let's get into trend selection, right? Okay, guys. So the first thing is trend selection, and in that the first thing is pro. So what do I mean by this, right? So actually it's all very simple. Usually we trade 3 structures: the primary structure, the minor structure, and the fractal structure, right? So pro usually means that the primary structure and the minor structure both are in pro trend, which means that while you take a trade, let's say you take a downtrend trade, the trend of this trade is pro for primary structure and it's pro for minor structure. So don't be worried if you guys don't understand this. I will use some diagrams here as well. Okay, so first we get breakout structure, right? So let's consider this as a breakout structure. And let's take that this is a primary structure, right? So this point is a primary structure. First, let me mark that. This is a primary structure. So this is the highest hierarchy of structure that we are using, right? So now when we get an external inducement like this, we will consider this as a minor structure, right? So let's mark this as minor structure. So let me mark this as minor structure. Okay. So this is primary structure, this is minor structure. We don't have to worry about fractal structure for understanding trend selection, right? Okay. So let's say the market comes down and you're looking forward to take an entry in this point, right? So usually what we will do here, we will mark an order block something like this, and we will take an entry like this, right? So what is the trend of this trade? So this is the trade that we are taking, right? So what is the trend of this trade? If you see here, it's actually pretty simple. The minor structure is an uptrend, right? The primary structure is an downtrend, right? Which means that this trade is looking forward to go up, right? So which means that for minor structure, the trend is pro. For primary structure, the trend is counter. Okay, so I hope you guys will understand right now. So this means that this trade is pro counter, which is the second data point I have marked here, right? So I hope you guys will understand this, right? So the first thing that we have written here is for minor structure, and the second thing that we have written here is for primary structure, right? So which means that when I say pro, when I say pro, it usually means the first is minor trend and the second is primary trend, right? Okay, so now let's go to the first data point. Okay, so this trade is pro counter, right? Which is the second one right here. So what's the first one? Let's say the market goes up and the market changes its trend like this, right? So which means that this is a breakout structure. This is a primary breakout structure. And when the market breaks this point, the trend has changed from upside to downside, right? Okay, let me just keep this clear. Okay. Okay, guys. So if you see here, the primary structure is in downtrend, right? Now the minor structure, which is this one second, which is this one and this one, right? So the minor structure, it was uptrend here, but once the market broke this point, the minor structure has shifted from uptrend to downtrend, right? So the minor structure is also in downtrend. So when we take a trade here, let's say we mark an order block and we take an entry right here, like this. The trend of this trade is pro, which is the first data point right here, right? So let me make this clear. So this is the first data point. So here the minor trend is also pro, which is downtrend, and the primary trend is also pro, right? Both are pro. So this trade is what we call as pro. So now you guys should understand this, right? So this is the best trend to trade. This is the highest win rate, the highest RR, the lowest drawdown. Every good thing is present in this first pro trend, right? So as we go down, the results will be bad. Okay. So now let's look at pro counter. We have already discussed this, right? When we take a trade here, it's actually pro counter. When we take a trade here, this is actually pro counter, right? So the minor trend has been created right here, and when we take an entry here, the minor trend is upside, the primary is downside, right? So this trend is pro counter, which is the second one. And the same for this trade as well, guys. So as you can see, while you take an entry here, the minor, okay, let me just delete this if you guys are confused. Oh boy. Yeah. Okay. I'll just draw this once again. Okay. So this trade is also pro counter, as you guys can see, because the minor structure is still in uptrend, right? It hasn't shifted from uptrend to downtrend, right? So this trade is pro counter. So that's the second data point. The third data point is counter pro. The same thing, guys. The same thing. When a trade is, let's say you're taking an entry right here, right? So that means that the price will come from this point to this point, right? So usually what we will do here, we will mark an order block in the primary structure. And when we get inducement, let's say a confirmation like this, this is where we will take this trade, right? This point. We will mark an order block, or we will use a fib, and we will take an entry in this point. And as you can see, the minor trend is actually still uptrend, but the primary trend is actually downtrend. So as we have discussed, the first data point is for the minor trend. The second data point is for the primary trend, right? So in this trade, what is the minor trend? The minor trend is counter, because the minor trend is uptrend, right? So that's why we have written this as counter. COUN. Okay, let's leave it at that. So the primary structure is in downtrend, right? So when we go here, the second one is for primary structure, which is pro. So here the primary structure is downtrend. So when we take an entry, the minor is counter, which we have written here, and the primary is pro. So this is the trade that we call as counter pro, right? Okay, so hope this is clear for you guys. Let's move on to the next one. Okay, so the next one is birth pro. Actually, the PP means it's pro. And what does this mean? It actually means this point at this point in the structure, this particular trade. So usually when the primary structure gives a breakout structure, this is the point where the new structure gets created, right? Usually this point is very messy, very let's say complex actually. So even when a minor structure gets created right here, when you take an entry right here, this is not really permissible because the entire weight of the primary structure is in the price, right? Also, this is the first point of creation for the minor structure, right? So it's not very strong to take this trend, right? So this is not actually a pro counter entry, right? Only when the market gives a breakout structure and then we get an entry here, this is what actually we should call as pro counter, right? I think I have mentioned this trade as well as a pro counter. Sorry for that, guys. This trade is not pro counter, right? Only when we get the second minor structure, that should be called as pro counter. So what is this trade called then, right? When we take an entry right here, actually you should not take this entry. I haven't labeled anything to this trend, but you should not take this entry for the first minor structure, right? It's better to wait in this point, right? Okay, so what is birth pro? Actually, guys, this is taking an entry somewhere like let's say the minor structure is not yet created, right? So sometimes what can happen is when a minor structure is created, usually the market will break this point, something like this, right? So we will consider this as a minor structure, but the market will definitely most probably break this. So we will consider this as a minor breakout structure, right? And this is the point where we can actually take this trade. You can take a sell entry right here, right? This is what we have mentioned as birth PP, right? So guys, so if this is confusing, actually you can even not trade this, right? Because this is the lowest probability in trend selection, right? The birth PP is the lowest probability overall, right? So if you are a beginner, if you don't have backtested data, I would suggest you don't take this entry, right? You can just use these first three trend selections. Okay, guys. So this is all about trend selection, and this is the first thing you should actually do when you are looking forward to take a trade. This is the first thing you should determine, right? Whether the market is in pro counter or in counter pro. So don't forget, if this is confusing, always keep this in mind. The first one is for minor trend. The second one is for primary trend, right? Okay. Now let's get on to phase selection. I think I will use this. It looks good, right? Actually, it doesn't look good. Okay, now let's get on to phase selection, guys. So the phase selection is actually the same which we discussed for trend selection, right? So the same thing, we get a primary breakout structure. We will mark that as primary. Let's say the market goes up and comes down. We will mark this as a primary structure. The same thing we did for trend selection. Okay, so this is primary, right? So the phase is when the market creates a new structure. Let's say we get an inducement right here. This is the minor structure, right? So we'll mark this as a minor structure. Okay. So we'll mark this as minor breakout structure once again. Okay, guys. So guys, the phase selection is basically market structure, right? We have three structures. If you guys have forgotten this, the primary structure, the minor structure, and the fractal structure, right? So any structure which is lower than this, lower than fractal, we will consider the fractal structure. And even if a structure is even lower than this, we will consider this as zero fractal, right? So I mean, these are all just us labeling these things so that we can understand the markets. Okay, so okay, I will still explain all these things, but if you guys feel this is too complicated, I would suggest you guys can simply trade these first two structures. Okay, the first two structures, it's more than enough. Okay, so M phase usually means M trend. F phase usually means fractal trend, which means that let's say the market is right here. So only when we get a 0.5 and a breakout structure, we will consider this structure as minor trend, right? So before that happens, sometimes what will happen is the market will give us an entry right here, right? An entry right here. The market will do this. So here we didn't get a 0.5 retracement. We only got an external inducement, right? So this is what we will mark as fractal structure. Okay. So as you can see, the lines, the depth of the line is clearly, this is for primary structure, small, slightly bigger is for minor structure, very small is for fractal structure, right? Okay, so that's how I actually have my saved templates, right? Primary structure, minor structure, fractal structure, and zero fractal. So when you take a trade right here, this is what I actually mean as fractal structure, okay? So you guys don't have to complicate this too much. So what is fractal structure? It's the same thing, guys. When we get an inducement right here, let's say we get an inducement right here. This is what we consider fractal structure, right? Because this entire thing is happening between primary structure, between minor structure, and between fractal structure, right? So let me mark this as fractal structure, guys. Okay, so this is fractal structure, okay? So before mitigating the 0.5, when we get an inducement, something like this is what I consider as fractal structure, okay? And when you take a trade here, I mean, you should not take a trade here, right? Because don't forget the trend is, this is just a minor structure. This is the starting phase of minor structure, right? You should not take this entry. But you can take this entry. You can take the sell entry right here, like this. Because what is the trend of this? The trend is counter pro, right? Because the minor trend, the first is minor trend and the minor trend is uptrend. But we are taking counter to this, right? So the minor trend is counter and the primary structure is downtrend, which is pro, right? So this is the third trend right here, right? Okay. It's all good. Now, let's go to the strategy selection. So guys, this is basically a set of confluences, right? So as you can see, there are 3 confluences right here. Let me just zoom in. If you guys see, there are 3 confluences right here, right? For every single thing. So usually this means that there is no confluence, right? The 0 and this I have mentioned here. This means that there is no confluence, 0, right? So that's no confluence. And this is the complete, let's say this is the confluence where the market gives everything that we need. So what is this? What is ISB? So the first is inducement, right? I is for inducement. The S is for inducement in the previous structure. I will explain this, guys. Don't feel very overwhelmed by all these things. I will explain this. Inducement in the previous structure. B is simply for BOS, breakout structure. Okay. So let me just explain this. Actually, guys, I have a free course where I have explained all these things. Actually, I have a free course, and it's actually, the link is in the description. If you guys want to get some idea, you can obviously welcome to join that. Okay. So let's say we get an inducement and when we get a breakout structure. Okay. So here we got an inducement and here we got a break of structure, right? Okay. Okay. So when the market comes up, first you have to understand something, right? The price is right here. We all know the price is right here, right? But we should not forget that this is the previous structure, right? The point about this breakout structure, this is the previous structure, right? So let me even mention this. Previous structure, right? And the point that we are currently trading, this is the point where we call this as current structure. Okay. So these are all these are the 2 structures that are always present no matter where you trade, right? I think I'll just make this a bit clear because it looks messy. Okay. So we got an inducement, we got a breakout structure, but there is something missing in the current structure. So what's it? The answer is inducement, right? The market didn't give us an inducement like here. It just came up after the market gave us a breakout structure, right? So this means that there is no inducement. And for S, as you can see, there is inducement in the previous structure, right? So there is yes, and there is breakout structure, right? And this is B, right? So as you can see, I have mentioned this in the second point. So this is the second best confluence, right? So let's say there is inducement here. Let's say the market has given us some inducement right here. Okay. Even this is not necessary, right? So we will mark this as inducement, right? We'll mark this inducement. That means that we got inducement, which is I. Let's mark this as I. We got inducement in previous structure, that is yes, and we got breakout structure, right? That's B, right? So this is basically this entire confluences that I have mentioned here, guys, right? You can trade all these confluences as you want, but this is the entire juice of all these confluences, right? So if you look at this, the best one is where we get all 3 inducement in previous structure and breakout structure, right? And the second one is where we don't get inducement, but we have inducement in previous structure and we have breakout structure. The third one is where we don't get anything, but we only have breakout structure. But even this is more than enough to trade the markets, right? So this is basically the confluence case, right? So there's like, I have categorized this into 6 data points, but I would suggest you trade just these 4. Okay, so that's how that's the best way to use these data points. Okay. All right. So the third thing is the most easiest of all these categories. So what do I mean by valid, single OB, end OB, and all these things? So if you guys have been following our channel for some time, you already know that I only use 2 order blocks, right? The 50% order block and the extreme order block, right? So also I have mentioned all these things in the free course, but I will still explain this once again so you guys can understand this. So let's say we get a breakout structure, right? The first thing we do is we mark the swing high and swing low using the fib, and we mark the 0.5 point, right? So usually there will be only 2 order blocks, the one here, which is the extreme order block, and the one which is somewhere close to the 0.5, right? It can be like this, it can be like here, it can be like here. So this order block is usually somewhere here, right? You don't have to be very rules based in this, right? You should use a little bit of discretion based on your experience. Okay guys, so this is the 50% order block. Let me write all these things. This is extreme order block or end OB, and this is 50% order block, right? Okay, so the first is valid single OB. This means that there is no 2 order blocks, there is only 1 order block. Usually this order block is like very big, and you get these kind of scenarios, you get valid single OB usually in like FF and FS, right? There will be only 1 order block, there won't be 2 order blocks, right? Okay, so when there is only 1 order block, you should not call this extreme order block. I will call this single OB. Okay, right? Okay, so where does the word valid come here, right? The valid simply means that if this order block was the one who gave us a breakout structure, right? That means that this order block is valid single order block, right? So what do I mean by this? Let me just use the real market to get some examples, right? Okay, so this is a beautiful example, guys. You see this entire structure where we got a breakout structure right here. When we go up and look at the structure, all I can see is just 1 order block. There's only 1 order block in this entire structure, and it's right here, right? This is the only order block in this entire structure, guys, right? So has the market mitigated this? No. Okay, that's fine. So this order block was the one who led to a breakout structure right here, right? So the breakout structure was caused by this order block. That's why we call this order block valid. Okay, so this is the only order block in this entire structure, so we call this a single OB, right? So this is where the term comes from. Okay, so let's go back and okay, so this is the meaning of valid single order block, right? So you guys should understand that. So the next one is obviously, so this is the first best order block to trade. Valid single order block is the best order block to trade, where we will get the best drawdown, the least amount of drawdown, the least amount of losing trades, consecutive losing trades, and you'll get the best RR, right? So that's the best confluence. The second one is extreme order block or end order block, right? So this is as we have discussed this previously. Let's let me mark this. This is end OB, and this is 50% OB. Okay, so usually the market will fail this 50% order block. That's why I have named this as 50% order block, because there is only 50% probability that this order block will win. Usually this order block will fail, right? So when the market breaks this order block and goes to extreme order block, usually this is where you'll get some rejections, right? This is where the market will try to go down and use a breakout structure. So the second best order block to trade is extreme order block, right? So the third best to trade is invalid single order block. So as you guys already know, this is valid single order block and this is invalid single order block, which means that in invalid single order block, we don't get the breakout structure that's not caused by this order block, right? So what does that mean? It simply means that in the same example, this order block didn't cause this breakout structure. Usually there is something happening right here. That is, let's say the market will do this and the market will slightly go up, and only then we'll get breakout structure, right? So in this case, the breakout structure happened somewhere right here, right? So this order block didn't cause a breakout structure in that scenario, right? So in that case, we will just simply call that as invalid. And since there is only one order block, we will call that as invalid single order block. Okay. So next is valid 50% order block. You guys should already, I think you guys will understand what I mean by this. Usually this means that the order block that causes breakout structure. So let's say there is a 50% order block. If this 50% order block causes a breakout structure, we will call this as a valid 50% order block. And you can actually trade this, but as you can see, even if this is a valid 50% order block, it's in the fourth place, right? So of course you can trade this if you want. Okay, so the next one is fib. So this is actually a very simple thing. Let's say sometimes when we go to very, very tiny structures, right? For example, FF structure, we don't actually get any order block. Every order block is mitigated as the market comes down, right? There is no clean order block, right? So in this point, what we can actually do is simply we can use a fib, and we can, let's say, we can draw a fib, and we can simply take an entry in this point, right? We can take an entry in 0.5. Or you can take an entry in the golden zone, right? I think it's 0.618. So you can simply take an entry in 0.618 or 0.5, anywhere you want, right? So you can do this, right? Okay, guys. Also, one thing that I want to share is that if order block filtering is very, very, very hard for you, if it's ruining your entire trading game, I would say don't try to trade in order blocks. You can simply trade in Fibonacci, right? You can simply trade in the 0.5 or 0.6, right? You don't need to trade in order blocks, right? So guys, the thing is, if you feel something is difficult for you, try to simplify that, right? Don't try to overcomplicate that, right? So this is a very good thing. This is a very safe bet if you trade using Fibonacci, using all these SMC concepts. Instead of trading in order blocks, I will say you will be better off trading in Fibonacci, right? Instead of trading in order blocks, if this is confusing for you, right? Okay, so that's pretty much everything I wanted to share with you guys. This is the complete SMC optimization. I have spent years of time trading smart money concepts and tons of backtested data, years of backtested data, and only then I have come to this conclusion. So that's why I'm sharing this with you guys, right? So so that you guys can you guys don't have to waste a lot of time doing all these work, right? So guys, yeah, I have given this for free, right? But usually when we give something for free, people don't think about it seriously, right? But that's why I'm trying to state this again and again. This is a gold mine. If you guys understand all these things, you can do a lot better than what you are doing currently, right? So that's why I have shared this. Okay, guys. So yes, of course, this can be confusing. I'm not telling that this is easy for everyone to understand. This can be a lot confusing, especially if you are new to smart money or if you're a beginner. So what I would say is watch this video once again. And don't worry if you are confused about this. Just leave me a comment on what you are confused about, and I will be glad to answer any doubts you guys have regarding this, right? So that's all about this video. So I will see you guys in the next one.